Can you finance a home with an illegal ADU? In this video, I'll answer this question and share all the guidelines for Fannie Mae, Freddie Mac, FHA, USDA, and VA loans. There's a growing acceptance that accessory dwelling units are one way to add more of the affordable housing stock that we so badly need. Many states and cities are adopting programs to permit the construction of ADUs. But this is a fairly recent development. Historically, going back as far as the 50s and 60s, zoning in most areas banned ADUs, or what used to be called mother-in-law units or granny flats. But you can't keep a good idea down, so wherever existing housing was insufficient to meet demand, despite the bans, many homeowners built illegal ADUs. And even today, even in places where ADUs are legal, some homeowners just choose to skip the permit office and build ADUs without permits. So there are a lot of homes out there with illegal ADUs, unpermitted ADUs, and sometimes both. So let's break down how this impacts your financing options. What I'm sharing in this video is drawn on 3 decades of experience lending on homes with ADUs. I've had the opportunity to teach what I know to other real estate professionals and to help spread the good word about ADUs. So if you're in the market for a lender and you want to work with someone who understands and really loves ADUs, please don't hesitate to reach out. My contact information is in the description below, and I would love to connect. So let's dive into the details, starting with some definitions that are important to understand. When it comes to zoning, there are 4 possibilities. The first is no zoning. Believe it or not, there are some areas that have no local zoning rules, most notably Houston, Texas. If you own a property in Houston, you can build whatever you want, ADUs, whatever. But in most places, zoning and land use regulations restrict what you can build. And if a property complies with all the current zoning, it has what we call legal zoning compliance. If a property doesn't comply with zoning, but it could be rebuilt as it is, it has what we call legal non-conforming zoning. And this is often called grandfathered use. And if a property doesn't comply with current zoning and land use rules, then it is illegal. And although they're easy to mix up, these zoning compliances are entirely separate from permitting. Let's say you pull a permit before building an ADU and your ADU is legal, which is to say it's allowed by zoning, and permitted. You pulled permits. But what if zoning allows an ADU, but you skip the permit office? If you build an ADU, zoning would allow, but you do it without permits, it's legal, but unpermitted. Now let's say you build an ADU where zoning doesn't allow ADUs. You can't get permits because the ADU isn't allowed, so this would be illegal and unpermitted. And I'll draw from my personal experience for one more example. I once bought a property where at some point in the 70s, based on the light fixtures that were in there, a prior owner converted the attic into an ADU. An ADU wasn't allowed per zoning and was unpermitted, but if the property was destroyed in a fire, the city would allow me to rebuild it. So it had legal non-conforming or grandfathered zoning. So now let's talk about how all of this zoning and permitting affects loan options. And I'm going to start with USDA. USDA is extremely strict about unpermitted work, and that includes an unpermitted ADU. If your lender discovers there are any unpermitted improvements, USDA requires that the owner secure a retroactive permit and take any steps necessary to permit the previous construction, and that's got to happen before closing, or you have to buy using a renovation loan. But even when an ADU is permitted, USDA rules are still pretty unfriendly to ADUs. And it's not the ADU itself that's the issue. The presence of an ADU doesn't mean you can't get a USDA loan, but USDA doesn't allow properties with income producing potential. If you have an extended family, an ADU might be perfect for your kids or your parents, but if the appraiser notes that the best use of the ADU is to rent it out, or if the seller is currently renting it out, it's considered income producing and you can't buy the property with a USDA loan. Now, VA loans are more generous. The VA Lender's Handbook outlines minimum property standards for a home finance with a VA loan. And unpermitted work can be okay as long as the appraiser says the quality of the work and the condition of the property meet those VA standards. But there is one exception. Any repairs required by a local code enforcement agency must be made. So if the city knows about an unpermitted ADU and wants it removed, it has to be removed before you could get a VA loan. Now, when it comes to zoning, VA requires that the property comply with all local zoning requirements, but grandfathered legal non-conforming uses can be okay, like my property. The appraiser just has to talk about in the appraisal report how the grandfathered use impacts the property value and the marketability. The appraiser also has to research whether or not the house can be rebuilt as is if it were 100% destroyed in a fire. So now let's move on to talking about FHA loans. FHA rules are pretty much identical to VA. FHA has minimum property standards, just like the VA, and unpermitted work that meets those standards can be acceptable, and a property with a legal or grandfathered zoning can be financed with an FHA loan so long as the appraiser comments on how the non-conforming use impacts the value and marketability of the home and determines if the property can be rebuilt if destroyed. So permitted or not, if a property has an ADU that's legal or grandfathered, that doesn't detract from the value, doesn't make the home hard to sell, and can be rebuilt, it should be financeable with an FHA or a VA loan. But what about Fannie Mae? Now, Fannie Mae allows permitted and unpermitted ADUs in all zoning types, even illegal zoning. ADUs with legal or grandfathered zoning don't have any special requirements, but if a property has an illegal ADU, Fannie requires that your lender verify a few extra things: that the unpermitted or illegal ADU won't jeopardize future insurance claims, that the illegal use conforms to the neighborhood, and that properties like it have good market demand, and that the appraisal is based on the current use. Now, to show that the property has market acceptance, the appraiser is required to find 2 closed sales, these are called comparables or comps, that have the same non-compliant zoning. Fannie knows these can be tricky comps to find, so they give the appraisers a little bit of latitude, and they allow them to go back in time and find some older sales than would normally be permitted if necessary. And in case you hadn't noticed, I've been working in order of least to most generous guidelines, and I've been saving the best for last. Freddie Mac has the most ADU friendly lending guidelines. Just like Fannie Mae, Freddie Mac will lend on all permitted and unpermitted ADUs in all zoning types, including illegal zoning. If any improvements, including an ADU, were made without permits, the appraiser just has to comment on the quality and the appearance of the work. And one way in which Freddie Mac is really unique at this point anyway, this could change, is that they'll allow an ADU in conjunction with a 2 or 3 unit property, but that's only with legal or grandfathered zoning. An ADU with illegal zoning, if it has illegal zoning compliance, that's only permitted with a single family property. And just like Fannie Mae, the appraiser does have to find 2 comparable sales, 2 comps that have illegal ADUs to demonstrate marketability. And by now, you may have noticed a little bit of a theme. To purchase a property with an unpermitted or an illegal ADU, a lot of what's possible depends on what the appraiser has to say. And this makes sense if you think about it. The appraiser is the lender's eyes and ears at the property. The property is the collateral for the loan. Your lender really wants you to pay your payment on time, but sometimes something bad happens and you can't. And when that happens, the lender winds up with the property. If the appraiser can show that properties similar to the one that you hope to buy have good demand in the market and they sell readily, then your lender can feel good about the worst case scenario that nobody wants, but lenders think about the worst case scenario. Now, finding comparable properties with similar illegal ADUs can definitely be a little bit tricky, so ask your real estate broker to help the appraiser out. Your broker knows the market. They have a network of other professionals they can tap into, they can ask around and help dig up comps, and your appraiser will definitely appreciate the help. And I should also mention that although Fannie Mae rules are the only ones to explicitly call out insurance, insurance is an important consideration for every loan. Until you secure insurance, you can't close. If you're thinking about purchasing a home that has any significant unpermitted work or illegal use, you should do your due diligence with your real estate broker, with a home inspector, maybe even with the city permit office, and definitely with your insurance agent. And I want to call out one other way that Freddie Mac guidelines are unique. They allow your lender to include market rents from an ADU to help you qualify for a loan. Fannie Mae allows ADU rents in one niche income restricted program that doesn't work well for very many people. So right now, Freddie Mac's really where it's at. Although there is an exciting development brewing. At the time I'm recording this, FHA has a proposed change already written to their rules that would allow ADU rents as qualifying income. I'm pretty sure it's going to pass. I'll update the description below when this change goes through. And if you're heading down there to check out and see if I have posted that update, please give this video a thumbs up and subscribe to my channel. Now, although Freddie Mac has the most generous ADU rules, there are limits. Right now, no loan program, not even Freddie Mac, allows more than one ADU at one property. Now, this is an interesting puzzle in places like California and Oregon, which already permit multiple ADUs. But even if a house with 2 ADUs is legal per zoning and the ADUs were permitted, that property isn't eligible under any current loan guidelines. But if you want to finance a property with more than one ADU, don't lose hope. Give me a ring. It's a little bit of a square peg into a round hole project, but I've managed to sneak a few properties with multiple ADUs into Fannie Mae and Freddie Mac loan rules. Thanks so much for watching.